And we're live. Doug, what is going on over there?
Come on over.
Welcome to Gimbal. we are live and we are looking forward to hanging out. Doug's on one of the new Gimbal chairs. And
I'm switching out.
He's the only person to fall off of that yet is me, so that's a good thing. And you won't. Come try it. Welcome. For your safety, here's our disclaimers. Amanda usually does this, so I'm going to have to go through them really quickly for you. Do not put gasoline in plastic bags. In case you needed to hear that, the shortage is over, and you do not want to store gasoline in plastic bags. This is strictly our opinion. Content provided at the event is for general information only and not intended for specific advice or recommendations for any individual. Any performance reference is historical and is no guarantee of future results. No guarantees, folks. No guarantees. Any economic forecast set forth during this event may not develop as predicted. Imagine that. And there can be no guarantee that any strategy will be successful. That's true. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities, though, are offered through LPL Financial, which is a member of FINRA and SIPC. Investment advice offered through Gimbal Financial, a registered investment advisor, a separate entity from LPL, and we are glad to hang out with you all today. I hope you're well. What do you say, Doug?
Hey, today's going to be a good day. It's sunny, it's bright, and it's the weekend. So welcome to the weekend.
It's an exciting weekend. I wanted to show you guys something here while we're still in the disclaimer mode. See if I can find it here. I've got a lot of high value things open on my screen.
Yeah, you do.
It is.
These are all high value because I emailed them to you.
I know. That's what I was looking
Thanks
at.
Thanks for popping them up.
Let's go back here.
I was listening to Bloomberg Radio on the way in. Do you ever do that?
I listen to podcasts, but not that particular source of info. What'd you hear?
Well, it was just fun. I heard some guy with a British accent who seemed really smart. And then they had some guy like me on there with my kind of accent. And they were just a great team. I mean, hats off to those guys. But they were talking stocks. It was really interesting.
Doesn't your IQ go up about 50 points by just having a British accent?
I think so.
Yeah. All right. I want to show you guys this because this is real. Like, we just finished our disclaimers. I'm going to show you. I found this one on Twitter yesterday. Y'all see this? The U.S. Consumer Product Safety Commission is an agency of our government. Okay.
Good grief. Is this for real? Are you sure this
is off of Twitter? And so I put this disclaimer on our weekly disclaimer just to tell you how much help we need from those folks in D.C. Do not, see it here, fill plastic bags with gasoline. That is a legitimate tweet from our government, watching out for the fair citizens of the United States of America. It doesn't bode well for our country if we need that disclaimer.
There goes my weekend plans. I mean,
kind of explosive there. I thought I'd go over the COVID update. It's I think what's going to happen with COVID is there's some big news thing is going to come up, and we're never going to hear COVID again. I don't know what it's going to be. It might have, the gas shortage might have been the thing the media was hoping for, but that's what I think is going to eventually happen here.
I haven't looked at the COVID tracker. What's going on there?
So one of the things up here in the top right is people are traveling. You were just telling me that you've got Glacier National Park on your itinerary. And so hotel searches are up 65%. So that means the roads are going to be busy and people are going to be out there. A couple things I'll point out to y'all as you're considering this. This goes back to January of 2020, this chart over here, the weekly count of U.S. deaths and excess deaths. And what this means is, sadly to say, people die in the United States every day. And that's just what happens. And if you look over to this chart, the orange line is the average U.S. deaths in the United States at that season. And so anything above that orange line is excess deaths, somewhat might have been attributed to COVID. They could have been from other things. You might have had a hurricane, a tornado, or things that did it. But in the COVID pandemic, the excess deaths on a monthly basis popped up for a bit, but it wasn't like what's happened in historical pandemics where millions and millions of people died. These are just a few thousand excess deaths, which I'm not negating the value of any life. I'm just saying that in a traditional Spanish flu kind of pandemic, you would have seen this thing double the size of that orange line there.
I'm so thankful for introverts. I mean, the introverts of the world keep track of data. And a year ago, we really didn't have any data.
Yeah.
And so just the fact to have data today is a big deal where we can see positive trends like this and be encouraged by it. I was reading another source of ours, Bespoke, and they were talking about the population across the world that has been vaccinated. And it's mind blowing.
Yeah.
How many people are being vaccinated right now. And so we're going to start to see some data with the vaccination numbers. And that's going to be really encouraging to see, I'm sure, 6-9 months out from now.
I don't know that that we can even comprehend the magnitude of what the free enterprise system has done. The government helped a bit with this, but I'm not sure how much they delayed the progress. But to think that a virus shows up on U.S. soil sometime, arguably late 2019, early 2020, and the alerts, all system alerts went off, and within a couple of days of getting 2 days of getting the footprint of this virus, there was a solution. And then to the help that I think the U.S. government did was stay out of the way. They didn't require this thing. Like, can you imagine a traditional drug, if this had to go through the FDA process to protect us from the government, we would still be years away from this vaccine even being there. And so what's happened is just mind-boggling, but it also is a great picture of how free enterprise works. There's just incentives to do things that help just thousands or millions of people.
Well, and we say it around here all the time. Like, if we have a system in place and we've had that system for the last 10 years, does it need to be looked at again? And hopefully the lessons learned on this is maybe fast tracking or rethinking the way things could roll out could be very beneficial to the end user.
Well, I mean, if you think of the logic behind it, the people who have chosen to get the shot in their arm, they have no historical data to know what actually happened or will happen. And that's called let the buyer beware, right?
Right.
And nobody forced anybody, I don't think, at least in the United States, I'm not aware of, to get the vaccine. So if technology can create a possible solution for a problem for which it can be fast tracked, and people sign disclaimers saying I'm okay with that, and they're willing because of their anxiety level to get that medicine, why couldn't there be something like that for AIDS? Why couldn't be something like that for cancer, osteoporosis? Why does it have to go through all this long drawn out thing? If somebody is sick and suffering and they need help, why can't they just sign a disclaimer and get the medicine? That's the capitalist in me thinking that there's great possibilities if the government would back off a little bit and give the individuals more responsibility in their decision grid.
Well, innovation always wins. And that's a question I've got even this week is, hey, can we get ourselves out of debt? Yeah. And yes, we can. And it's through innovation and rewarding the innovator. I have some favorite stock oriented commercials. I don't know that I can say the name of the company, but they just crack me up every time they're on TV. And basically what this company did years ago is they became a disruptor, and they thought, hey, why does a commission have to be $70-$80 a trade? And they were able to lower it to like $7 or something like that at first. Now you could probably trade, I don't know, a billion shares of something for zero. And so just, innovation works. It leads the way, and it creates new opportunities for people to do things quicker and more efficiently.
I don't watch a ton of TV, but I saw a commercial this weekend, and I had to stop what was going on, and I'm going to look it up while I'm talking here. But I saw this commercial, and the innovation in this commercial blew me away. It was Domino'S pizza. I don't know if have you seen the Domino'S pizza?
I haven't, but I remember it was like a year ago where the pizza. I don't know if there's like a pizza index, but man, the pizza companies were just ripping it like a year ago.
Yeah. So they have, I'm going to share this with y'all because this is some of you don't know me very well. There was an edge to me in my younger days, and this created an edge. And maybe they may not want me to even say this because it's how my brain operates. But they have a robot that will deliver pizzas at Domino's now.
Oh, right on.
Have you-
Like from the air, or what do you mean?
This-
Oh, sweet.
Yeah, so I'm gonna share.
I'd order a pizza just to see that thing.
Yeah, so this was on the commercial, and I'm like, oh, I don't normally pay attention to the commercials, and I'm like, what is that?
That is
these
really
little
cool.
doors open up on this thing, and your pizza's in the little door. And this is the part that Domino's nor anybody else would really care for me to disclose, but in the teenage days of me, if one of those things showed up in front of our house, we would definitely lay it on its side like a turtle. There's no way the pizzas would
You're
get
saying you would go cow tipping?
Oh, absolutely.
You go cow tipping a Domino? Man, this is recorded.
I know.
Kids,
Do
we're gonna put that in the
this at
disclaimer.
all.
Kids, do not listen. Do not follow Keith's advice on this.
That was a younger version of me. I'm much more refined and civilized, so I would never dream of doing that. And don't do that. That could be a lawsuit in the making there. So, what do you got here, Doug?
Well, I
saw we don't have anybody else here. We may have to.
I got a client who's a little early.
Oh, okay.
That's cool.
All right, they may join the show.
He can join the show. He's a cool guy. So I wanted to talk. I know we've spoke a little bit about psychology and when markets are doing things up or down, it's easy to get your feeler pulled in a certain direction, and the professionals do the same thing. There's expectations. I think we've talked about how earnings expectations have it's been unbelievable. I think 75% of earnings surprises have been good.
Yeah.
And that trend has been going on for a while now. But this chart, this is from the American Association of Individual Investors. And I look at this once a week. And basically what it tells me is, what are the professional investors and what are people who have money in the market where they're maybe trading or maybe they're buying and selling stocks a little more frequently. What are they thinking? And so bullish basically means that you're very objective or very, very optimistic on what stocks might do. Neutral is kind of like, I don't care. I don't really know. And then bearish would mean that you're afraid or you might be selling. And so you can see the bulls have started to come back a little in the last few weeks. And that's been really interesting to me. This last week, we showed a graph and talked about how the NASDAQ has been pulling back really since February 12th, I believe.
Yep.
And the S&P had been charging ahead. And so this chart that you see here is just a reflection of that. It's a reflection that says the bulls have kind of pared back their optimism. And it doesn't mean that this continues or anything, but I wanted you to see that even the pros, that they have their own gut reactions and feelings to what the market could look like in the next 6 months. Do you have that other?
Yeah, I do. Hang on a second here. Is this the one you want? Let me share this.
Yeah, this one's kind of interesting. Again, this is kind of a similar story, and it shows that the exposure index on the bottom there, you see high optimism on the red line and high pessimism on the green line below. I think those colors should be reversed. What do you think? I don't know why they did that. But anyway, you can see that the pessimism has been picking up. At the same time, the S&P might be topping. And so that's another just interesting look at what the pros are doing and how they're feeling about the stock market.
Yeah, it's such a difficult idea to invest and have a long-term perspective and still keep realistic in your expectations as well. And then to go through what we've gone through in the last 6 months, where you had stocks like GameStop that just shot through the roof because of a lot of speculation, and it didn't really have any business model kind of attributes that would make you think that that's a worthwhile investment. And so people were rewarded for just jumping on the train. Yeah, just jumping on board. Yeah. And that tends to cause me to think that things are a little risky. And and that's been our attitude this week, just turning the dials down for clients a little bit this week. But let me share what's going on NASDAQ here with folks so you can kind of see this. Is the NASDAQ is an index that reflects generally the more progressive up and coming companies, and it has it's heavily weighted with the FANG stocks: Facebook, Amazon, Netflix, Google, and I'm forgetting Apple. And if you look to this date right here that Doug pointed out right here, we peaked out in the market, came across, we had a more than a 10% drop here in the end of February, and then it rallied back, and then we've seen a very similar drop this month or last month into, well, that's this month. And this is the line that we've talked to you all about in the past. This red line right there is the 50-day moving average. And historically, when you come through that 50-day moving average, you should definitely pay attention to what's going on in your investments. And so we saw that happening toward the end of last week and into this week. And we don't know whether this is the beginning of something more challenging or just a temporary sell-off, but we are managing it as cautiously as we have in a while, I think.
Yeah, I think one of the reoccurring themes that I hear out there is just buy on the dips, buy on the dips. And that has worked for a lot of people to buy on the dips in the last few years. But there comes a point when buying on the dip doesn't work.
Yeah,
and normally that could be when it comes down below to that black line, the 200-day. But as Keith mentioned, when we see this type of activity, we like to shore things up, be a little cautious, maybe bring the boat back into the harbor and tie it up. And when things look a little bit better, we can go back out.
Yeah, and you can see the divergence. I showed you the NASDAQ, which is a lot of high-tech companies, versus the S&P 500 here, which is predominantly going to be your standard companies that you're used to doing business with, your retail stores, your industrial companies and things of that nature. And they really haven't experienced the pain that the technology stocks have. And I think in most of our portfolios, we kind of tuned out a little bit of the technology and had moved more this direction in the last few weeks and months. And yet even this, if these have been able to hold the 50-day moving average right here, which is a real positive sign. If you can hold that, then maybe the market's shifting from those heavily tech-laden stocks to some of the more traditional ones that you've seen.
This week, I was looking at several different industry groups at the price you're paying for the earnings you're getting. And it's been very interesting to see that there's very few out there that have a low price to what the earnings might be. And those have primarily been the banks.
Yeah.
And it's interesting because Keith and I, we look at individual stocks all the time, and we are looking to see which ones are setting up nicely and could outperform. And in a couple of my screens, there was like 6 opportunities. There's one that had 5. And these are screens where a few months ago, you might have had, I don't know, 200.
Right.
And so again, it's a good time to bring it into the harbor and just kind of be patient.
It is arguably a correction, even though neither of these indices reflect that there's a correction. If you watch some of the most strategic and successful investors of the last few years and the companies they were buying, some of those stocks that are in those portfolios are down 30 and 40%. A lot of if you look over here to the left on this chart, where we came flying down with the COVID last year, where the markets dropped ridiculously, what was that, 40% there, and we start rallying back up, the companies that led that rally on into probably September, October of last year, some of those maybe doubled or tripled in value, and then now they've just been tanking, probably, if not since February, maybe even a little bit before that. But they're names, they're household names that everybody was wanting to jump into, and had somebody bought and held on to those. They're down a good 35, 40%, and even some names are down that much in even a shorter period of time, maybe over the last 6 weeks.
Well, and there's always themes going on, and one of the themes inside the communication sectors, is just what will streaming look like, You know, what will streaming look like? Will it come to your house anymore, or is 5G the place to be? And so some of these, what I would call like dinosaur stocks, are making plays into those streaming spaces, and they've really participated because of it. It'll be interesting to see what happens with the next trend, if that's the place to be, or what will emerge. But it all goes back to what we talked about earlier, and that's innovation, and then the supply and the demand for that type of innovation.
Yeah, and I saw some other notes had here, Doug, that Reuters had an article out a few weeks ago that said melt up was the question mark, more money poured into stocks in the past 5 months than the last 12 years. And
Dang, really? That's incredible.
So part of that is that our government, the Federal Reserve has printed, 30% more money, so that money has to go somewhere. In case we talked about this in the past weeks, that if your house price, according to Zillow, is up, it's not that you did anything great. It's just that there's inflationary practices that are driving all assets up in value, including stocks. And so, if you're concerned when you look at your portfolio and you feel like we're being too conservative, these are the sorts of articles and research that we're doing that causes us to take a little bit of a pause, and to just be able to make some changes and maybe step back into some really nice opportunities as these companies back off and kind of reset their starting point. So that's the thought on the markets. Let me switch over to a couple other things real quick just to show you. We haven't talked about this in a couple weeks, and I have to hit the right symbol in.
That's good.
This thing gets a little cantankerous.
So Keith's popping up the VIX, and basically the VIX helps us gauge, how much anxiety is there in the market. It's a chart that will display what we looked at with the American Association of Individual Investors, investor sentiment. It's a similar thing.
Yeah, and you can see the VIX in a really low volatile time. It's going to trade between this 10 and 20, which it was doing pretty consistently. And let me go back a year and show you what it looked like over here. See how low this was over here? It was trading in this,
man, that is like
10 to 15 level. And then the COVID thing shot it up like a rocket ship there up to maybe all-time highs. This measures the volatility in options, which is just an alternative to the stock market, to give you a flavor of the stock market. But we had all this shooting up last year and the volatility, and it started settling back down, and we got back down to 15, which is where it was before all the COVID thing happened. But this week it shot up as high as I think it was like 26 or 27, and it was here on Wednesday, just 26, 28 is where it hit. And so the volatility has definitely picked up in the S&P. And then if we go back, which we were talking about the it's not going to cooperate.
And folks can try and Monday morning quarterback this. You might say, oh, it's job numbers, or it's the oil cyber attack.
Yeah.
But at the end of the day, all it is people want it out.
Yeah, and this is the chart looks the same on the NASDAQ volatility index as the S&P 500. The difference is there's just you would expect there's going to generally be more volatility because those stocks are more aggressive and such, but it was up over the 30, 35 level this week. And so the relatively peace that we've had in the market has kind of jolted out of it a little bit. And we don't know whether this is a temporary thing or something maybe is shifting for a little longer term. A lot of the pundits say sell in May and go away, and that's paid off and sometimes for investors. But last year the summer was a really profitable time. So we've got our fingers on the pulse and paying close attention to what's going on.
I don't know if there's a VIX indicator for the global markets or not. That'd be kind of interesting to see, because the global markets have been good too.
Yeah, and if there is, I would guess it would be higher than those, because the U.S. tends to be a more stable place, and the markets tend to be a little more predictable than if you're investing over in Europe or someplace else. But and that shifts too from time to time.
Yeah.
Well, I went on a walk, talked to one of our neighbors earlier this week, and they gave me a brochure, and I only bring this up because if you are, if you've got a parent or a grandparent whose health seems to be struggling, there's a lot of stresses involved with that, and that puts you in what they call the sandwich generation. If you're trying to take care of your kids and your parents or grandparents, and that can be an intimidating thing. You can find some solutions on the internet if you look, but sometimes there just doesn't seem to be the time to get those things done. And there are resources out there to help you. And no matter who the elderly person is that's having some health challenges, we would just encourage you to call us. We can connect you with some of the people that we've worked with. We've got professionals in all aspects of that, and it's a heart-wrenching thing to go through some of these health challenges. This brochure I picked up was aid and attendance benefits. There's benefits available, particularly if somebody was in the armed services, to help out with some of those long-term care expenditures and things. And we are happy to connect you with that network of professionals that we have. And so if something's going on in your world and you haven't had the courage to talk to anybody about, this ailing family member, call us. We'd be thrilled to help you out.
Yeah, I talked to a friend of ours today. I just gave him a call, and just it's amazing how these small businesses around Indianapolis, or our neighbor next door to us here, how you treat the young ones and how you treat the older ones is a reflection on the wealth of our society. And it's pretty neat that there are small businesses out there aiming to help and serve folks who are in diminishing capacities.
Yeah, I've been involved in these processes close to home with family members over the last decade. And I feel like just the grace of God has given me a peace to walk through those things. And then I would think probably unusual compared to what I suspect most people do. Maybe it's part of what training that we have of the different resources that are available, but very high stress scenarios, very difficult decisions. And I would not recommend walking through those things alone. We've established systems to help people, and we'd be thrilled to help you think through the process and to design a plan to go forward with it.
Well, that's all I know for today. Keith, what else you know?
Well, I in the distant, I hear diesel firing up. I can't wait to get the smell of diesel fuel. And with all that said, I am loading up in the RV about 4:30 today, and I will be somewhere other than in central Indiana by midnight tonight. And I can't tell you where, but this time next week, I probably won't be joining you. I'll be out west somewhere, would be my prediction.
Well, have a blast. We'll look forward to stories from the road.
Well, you guys have a great weekend, and know we're here to help you and encourage you in your journey, not only financially, but in life. Take care.